I got some breaking news in my family. Can I tell you guys real quick? You hear me, Dan?
Yeah, go ahead.
Well, this is really cool, and as a father, I'm extremely proud. I have a 17-year-old daughter, and this is totally on a different scale, so I know it has nothing to do with what I'm doing on Leaps, but my 17-year-old daughter just passed her trading test today, and next week she'll be a proprietary trader where someone's actually giving her money to trade, and she gets a percentage because she's passed the test. And here's what she did is, my son actually taught her, which is part of a boot camp we do. She started trading in August, so she traded 3 months, and then she went right into trading I'll just call them like a trading test, where they test you on your trading, and they really rake you over the coals because it's all about money management and stuff. But she just passed about 30 minutes ago her test, and she's going to be a funded proprietary trader with other people's money, and she's 17. She's still in high school. She trades before high school, and it's everything we do at the boot camp that my son and I do. And it's just really cool because trading was so much harder for me. I don't know how many accounts and hours and years just learning how to trade. And when you're 17 and can have success in 3 months and then go right into trading, taking tests to trading, is, to me, it's really exciting because it's
not just
all
taking
about
tests to trading,
empowering your kids. So we're just ecstatic, Dan.
That is amazing. That is pretty darn awesome. Yeah, I know you were telling me that she was close. She was within a week or so of passing those tests, and so that's really great news. Congratulations to Lauren, and nice job with you and Alex, kind of prepping her and getting her up to speed on that. Because, like you said, I mean, if I understand correctly, before 3 months ago, she didn't trade at all, right?
Well, she started in August, so she traded 3 months in August, and then she went into live trader preparation and went into and started taking the trading tests. So she's been trading 6 months now. But think about it. What did you guys learn in the real estate world? It's all about other people's money, right? OPM. Well, in trading, it's OPM also. You just got to know who to contact and who to work with. And instead of blowing out my trading accounts, I'm saying, hey, Lauren, you pass these tests and blow out their accounts. But it's funny that she's now a funded. Next week she'll be a live funded trader, trading a large proprietary fund prop firm's money, and it's just an exciting thing. We're going to have a big dinner tonight and celebrate because she'll be able to pay for her college all by herself. How cool is that? So, anyway.
Yeah, that's awesome news. And if I understand correctly, they're actually. I mean, we're not talking about like $100, $500. They're actually funding her with $30,000. Is that true?
That's right, a $30,000 trading account.
Yeah, that's amazing. So, again, please pass along my congratulations. So,
yeah, I'll do that. So, anyway,
all right.
I just wanted to make that breaking news because we got a lot of friends in the room here today, and I just wanted to. They've been hearing me talk about it from time to time, and it's official. So, all right, this is John with Invest with Success, and what I'm going to talk about today is leap into profits, and it all comes back to this kind of thing. Do you guys remember? And I remember this day just as it was yesterday. I was I was a senior in college, and I was gassing up, and I looked up at the price, and it was 99 cents a gallon. And I looked down at the pump again. I go, you know what? This may be the last time I'll ever gas up at 99 cents a gallon. And what's happened since then? Well, I've gassed up for $4.50 a gallon, and it's been a crazy ride. And the funny thing happened just the other day, and I was actually with my daughter Lauren. We're out driving around and stuff, and I looked at the gas pump, and it was $1.99. And I told her my little story in high school because she was the same age. I said, Lauren, this could be the last time you gas up for $1.49, or I'm sorry, $1.99. Other people are showing other prices. So, and there's always new technologies, things could come out, but it could be the last time you ever gas up for $1.99, at least where I'm at. So it was just a really weird thing to look at that and say, wow, you know what? Commodities and oil prices, gold, yeah, any type of commodity moves in cycles, and you know, there's great things. But the biggest thing I thought when I was a senior in high school was, and I looked at it when gas was back at 99 cents a gallon, I was thinking, wow, wouldn't I have loved to bought oil at and be able to gas up for 99 cents for the next couple of years while oil prices go back up? What a great position I could be in. How could I ever lock that in? I mean, how cool would that be? Well, it didn't happen, but just think if you would have held an oil back in 1990 all the way up to today. It would have been an amazing investment. Well, today, you probably saw my title. It's Leap into Profits. And just so you guys know, LEAP is an acronym. It means basically long-term equity anticipation security. So in a nutshell, it's just a long-term option. And I may have option traders in the room, I may not. I like to break it down to real basics and real simplicity. An option is really a LEAP option is really an option that is 9 months or longer in length. And just to get to know my audience well or not, on a scale of 1 to 10, how well do you understand option trading? 1 to 10, or actually I should say, how well do you guys understand what an option is? Give me a 0 for I don't know anything. 10, yeah, I know I'm on track with you, John. Just so I know where you guys are today, because I don't want to talk in terms that are. I'll change my verbiage to meet with you guys where you're at. And it looks like we got a lot of 5s and 8s and some 10s. Fantastic. Okay, so all an option does is it's like owning a stock, but for a lot cheaper price. But you have a limited time to own it, and that's all it really is. And I like to use the simplicity term, not the term of, you know, it's all that legal mumbo jumbo. But there's some really cool things going on in commodities right now. And I don't have all these fancy slides like all the other presenters do today. I just like to write things out and draw them out. So work with me on that, because I'm a visual learner, and I like what that last presenter said. You know, show me what you're talking about, and I'll understand it. You know, don't just talk words. So I'm going to kind of show you about what we're doing. But with the whole markets, here's what generally happens is, you know, this is the Dow, and the Dow keeps going higher and higher and higher, usually peaks out. Well, when the Dow starts going down, or the let's just say the Russell 2000 or the S&P 500, or, you know, all the big indexes, when they peak out and they start heading down, you've got the big hedge fund managers, the mutual fund managers, all the big money. They are slowly exiting their positions. They're slowly closing them out, and they're forcing the market down. Now, the problem that, and it's a good problem, that the big money, the mutual fund managers, the hedge funds, and all that kind of stuff, the problem they run into is they can't keep money in cash. Keeping money in cash is a no-no. You don't do that. So when the markets start coming down, what do they look to put their money into? Well, they'll look to put their money into commodities, right? Like oil, gold, silver, frozen concentrated orange juice, right? They'll put their money into you know, energy stocks or energy things, right? So they're going to move more towards a commodity-based setup because, you know, kind of like Procter & Gamble. Whether you like them or not, you got to buy toilet paper, or at least you should. And if you don't, then talk to your mom. They probably didn't teach you as well as you should, but you've got to buy toothpaste. You got to buy all the basic stuff, just the home necessities, right? Well, when the market starts to crash and the market starts to head down, it's called flight to safety. People are the big money, they want to go into bonds, right? And they want to go into safer investments. They want to hedge themselves against things going down too much. They'll go into currencies, absolutely. They'll go into the yen or the won or the German, anything else. They're going to go into it. So it makes an exciting opportunity for those people who are educated and understand the cyclical nature of markets, and they are cyclical. The housing is cyclical, right? We're gonna see movements of money into different areas, and if they start raising interest rates or lowering interest rates, you're gonna see a huge move of money, right? So it makes for a really, really cool way of the right people to get in at the right time to capitalize on what's going on in the overall markets. So we are right on the precipice of what's going to happen. So let me show you a nice little chart, and I'm going to bring up the CL. And a lot of you are saying, what in the world? And let me clean up my screen a little bit. There we go, a little simple. So let me just get some terms down for everybody real quick so we're all on the same page. I have a chart up of the CL, and it is the light sweet crude oil futures. And what we've noticed over time is in the last couple of years, we've gone from about $110 a barrel all the way down to about $43.58. It's been cut in half. And hallelujah, gas prices have come down quite a bit. In my area, they came down from $4 down to about $1. I think $1.80 was the cheapest I ever saw in my area. Now, I'm in the northern climate, so they're putting in all these additives so it doesn't freeze over and all that kind of stuff. But that's a pretty cool thing if you're an educated investor. Now, let me back up a little bit more. Let's go out to a larger time frame chart, and let's go up 20 years, and let's look at what oil's done. So if you look at what oil's done over the last 20 years, we notice it rotates and heads higher. See how it rotates up, down, up, down, up, down. Got all the way up to $150, roughly $150 a barrel, right? And then came screaming down, I think, to about 35, right? So how many of you wish that you knew how, back in 2008, how do you get into oil? You don't get in at the bottom. Not many people get in at the bottom. I don't, If I can get in a week or later or a couple days later than the bottom, I'm happy, okay? But how many of you wish you could have taken oil from $35 a barrel all the way up to $1.10? Does anybody know what kind of money you would have made if you would have owned the futures on taking it from $35 to $110? Let's just say you wouldn't be here right now. You would, if you put, let's just say, $10,000 into it, you would be where VJ is, and you'd be buying an island, and you'd be retired. Because I don't know the exact number, but I believe it's somewhere in the 20 to 30 million mark. Do you guys ever watch the movie Trading Places with Dan Aykroyd and Eddie Murphy? You guys ever remember that movie? I know a lot of you seen it, right? Pretty good movie, right? Well, have you ever did you ever watch the movie at the end when they're in the frozen concentrated or juice oil pit. Do you guys ever wonder how much money they made when in the movie, I think orange juice went from $1.30 down to 30? Yeah, I think that's what it was. Do you guys know how much money, if you calculated what they started with? Because I know Randolph, or not Randolph, but Eddie Murphy, who I don't think had any money, but Jamie Lee Curtis put in her $40,000, and I think Louis put in I think $150,000, but they had a $200,000 investment. You guys remember that? Well, does anybody know if you shorted frozen concentrated orange juice at 130 and bought at 30, do you know how much money that was worth in the movie? No, I didn't purposely calculate it, but I Googled it because I was really, really curious, right? Well, it turned out that that move in the movie made them in upwards of $350 million. So the next time you see that movie, I think you're going to have a little bit different picture. You're going to pay more attention to what's going on. But $350 million is what they estimated that Louis and Dan Aykroyd and Eddie Murphy made in the movie Trading Places on the orange pits that day. And how much did Randolph and Mortimer lose? You guys remember? I believe they lost upwards of $450 million. Remember that? They lost everything. So pretty amazing thing with the leverage. Does anybody know the leverage on oil? Yeah, the leverage on oil is roughly 40 to 1. Pretty amazing, isn't it? Now let me ask you a question. I love this guy in my room here, Bihat. Hopefully I said your name right, because you're giving me so many great ideas speaking today. Would you have a better chance on winning the lottery and making, $10 million to $100 million, or would you have a better chance on winning the lottery and choosing oil and just going long or short? What are your odds? Well, what are the odds on winning the lottery? I believe your odds are 1 in 70 million. Is that right? I think that's what I've read. 1 in 70 million. Well, what are your odds on guessing that oil is going to go up, down, or sideways? Well, it's roughly 1 in 3, right? Because you could just buy oil contracts and it could go sideways or it could go against you. But you have a 1 in 3 chance of making a huge amount of money, or you have a 1 in 70 million. Well, I think I'll take the 1 in 3. Okay, so John, how does this make me money? I see, this is all cool stuff. Show me how I'm going to make money with you, and why am I here in MarketFest listening to you? Well, guess what? We are at an unprecedented time right now in oil. And the funny thing is every 3 to 6 months, there's something else that is going to do something like this for you. But how do we take advantage of it? Let's go back to our yearly chart. Okay. Oil has done nothing but one thing for the past 6 months. It's gone down, 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 down. Dive, 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 right? It's been going lower. And there's one guy I like to listen to. His name's T-Bone Pickens, and he's been right, I believe, for 19 out of the last 20 calls on oil. He's the guy I go to listen to say, hey, what's going on? So when T-Bone Pickens calls, I answer. So we're at an all-time low. And again, guys, we can do this with gold. We can do a lot of different things. Yeah, palladium, euro, you name it. But what if I could get in today on oil? get in at 48 bucks. Let's just say we get in at $49 a barrel, right? And take it all the way up just to maybe 90. What kind of money could you make? You could be insanely rich if you bought oil futures. Now, what's the problem with oil futures? Well, here's the problem that you're going to run into. And I'm using a product called Thinkorswim. I think it's one of the top brokers out there. But when I look at their trade screen and I look at their option chain, what's the furthest out option I can buy? See, if I'm going to hold a position for 3 to 6 months, I do not want to buy an option that's 3 to 6 months long. Absolutely not. I want to buy something that's way, way longer than that. Because here's the real story and the real numbers of options. If I'm going to be in a position from 3 to 6 months, I want to buy an option that's, I would say, 2 years out there. If I'm going to hold an option just for 1 month, well, that's fine. Then, you know, I'll buy an option maybe 6 to 9 months out. You're always dealing with multiples of 4 or 5. So however long you're going to hold it, multiply it times 4 or 5, and that's how long of an option you're going to go. And say I heard oil's going to go to $20 a barrel. If oil goes to $20 a barrel, my experience is, and this is actually working with the Coke refinery that they used to be a client of mine back in the 90s. The Coke refinery is a refinery in Eagan, Minnesota that actually disseminates gas to the surrounding 5 states. And it comes from the Alaskan pipeline. And their cost is the same. And when they were a client of mine, they told me, John, it costs us 98 cents per gallon. That's our cost. And then you got state tax, and then you've got you know, government tax, you know, federal tax, all that kind of stuff. That's their cost. That's what they told me back in the 90s to produce oil. If it's less than that, then they're actually losing money. So that bar's been recently raised. Now, if oil is under $40 a barrel, that wipes out half to 2/3 of all the people who produce oil. When oil hit $70 a barrel, that wiped out some other of the companies that produce oil. So for it to go to 20 and lose money, I just don't see it happening. Now, can it happen? Anything can happen. You never use absolutes when you talk about markets, because they could come out with a new type of thing that the next day and everyone's out of business. And the truth of the matter is they've already come out with other ways of eliminating oil altogether for most things. But what do companies do? If they find out something that's competing with them, they buy the product and they put them out of business. So, or shut it down. They don't want to do that. We've seen that with a lot of different things. But if oil hit $20 a gallon or a barrel, I'd be going all in. That's for sure. So here's the problem we're running into. I can only go out to May. That is roughly, let's see, 4 months away, 3 to 4 months away to buy an option. And I could make an absolute killing. Think about buying an option and think about paying, $3.50, $4, and selling it for $30 or $40. It's an amazing thing. So there's just not enough time to be right on this type of trading. So what other things can I do to go longer term? Well, there are mutual funds out there that I can buy that buy oil futures and do that. But what's the problem with an ETF? Well, the problem with an ETF is that, sorry, with mutual funds, is mutual funds are expensive. They're one of the most expensive things to buy. And why do I say that? Well, have you guys ever looked into the real cost of owning a mutual fund? I mean, it's ridiculous. Do you know that all the fees associated with that? Do you know that the last couple prospectuses I've looked at mutual fund, there were 29 different fees associated with owning a mutual fund. And if you have a mutual fund in your IRA, in your 401k, or just buy them outright, you're not going to like what I'm going to have to tell you. And you're more than likely going to want to change the way you invest, because you're absolutely, in my opinion, getting raked over the coals in fees. So, look at the fees. You got transaction costs. Now you're going to have that with anything, but that's about 1.44%. You got brokerage costs, and then you got tax costs. You got cash drag. You got soft dollar cost, advisory fees, cost summary, non-taxable, and when you get down to it, they're charging you for advertising. They're causing you for all this stuff that when it gets down to it, and I think I'm quoting Tony Robbins on this one, when it gets down to it, owning a mutual fund is one of the most expensive things you'll ever do, because if you own it for more than 10 years, you've given away, and let me see if I say this right, I'm sorry, if you own it for 30 years, and you own a mutual fund for 30 years, you've given away 75% of your profits to the mutual fund. Because if you add up the costs every single year, think about it. Just on regular fees, every year, you're paying all these ridiculous fees. And if you're paying 1 to 3% of the assets to the fund manager over 10 years, how much money is that? That's, roughly 30% of all your profits. It's a bad deal. There's no way I would do that. Okay? Well, an educated person wouldn't do it. But mutual funds claim, oh yeah, well we beat the S&P, we did this, we do that. I believe only 4% of mutual funds actually beat the S&P every year. So, and the ones that beat the S&P this year, usually you don't see them the next year, because everyone invests with them and then it brings them back down. So what I want to introduce you guys to is a little old world called ETF. And ETF stands for electronic traded funds. And guess what they do? Let me just do it in a nutshell, because I'm going to run low on time today. An ETF is simply, they go out, and did you know there's about 6 to 8 different crude markets? You've got light sweet crude, you got Brent sweet crude, you got all these different oil markets across the world. Well, an ETF, electronic traded fund, is like trading a stock. Actually, let me say that. It's like trading an index. And I know most everyone actually in this room knows what an index is, so I'm not going to get into it. Yeah, I'm sorry, exchange traded funds, I appreciate it. An index is basically a group of stocks or commodities or a group of something that they trade as a whole batch. And an index might be, let's just say it's a commodity index. So a commodity index might have oil, it could have gold, it could have silver, and an index will basically trade all three of these, or you'll buy a piece of all three of these different commodities, and they'll break it down to one number, and you can go long or short. So an index is a phenomenal way to buy. But the problem with indexes is it can be very expensive to buy an index. If you were to buy the S&P 500 index, that could cost you anywhere from up to, what is it, $50,000 to buy one contract? Well, if you don't have $50,000, good luck, it's not going to happen. And would you want to put all your eggs in one index? Well, you maybe not want to do that. But if you do an exchange-traded fund, they've gotten the cost down a little bit more. And let me give you a good example of the way I would prefer to own oil futures. And let's see, where's that bad guy? There he is. Let me introduce you to the OCO, or UCO. Now, the UCO is the ProShares Ultra Bloomberg Crude Oil Futures. And let's just really quickly go to what the chart looks like. Boy, does that chart look familiar to everyone? It should be. It looks pretty much exactly like the oil chart I just on the CL oil, the light sweet crude oil futures chart I just showed you a few minutes ago. So a little bit different, right? And look how much money it's going to cost me to get in. It's right now, it's $8, right? Who here can buy, let's just say 1,000 contracts, or I'm sorry, 1,000 shares of UCO? How much money is that going to cost? It's going to cost you $8,000. And if you want to do it on margin, it's going to cost you $4,400 on margin. Can you guys do that? Yeah, you probably could, right? Most of you can do that. So that's all. That's very, very little money, and that's 1,000 shares, right? That's 1,000 shares. I mean, even 100 shares is $800, right? Not bad. So it makes it a lot more affordable. And the transaction cost to buy the UCO with Thinkorswim is $10. Okay, it's $9.99. Let's just say it's $10. Okay, you're not spending all these money with the mutual fund guys. Okay, you're not losing your money to all their shenanigans and all that kind of stuff. And it's funny. I do have a lot of friends that are certified financial planners, and you know, they think all their fees are noteworthy and all that kind of stuff. But you know, what service really does a certified, and again, I don't mean to put down certified financial planners, but when I talk to them and have lunch with them, because they're buddies of mine, you know, what service do they really provide? Most certified financial planners are just going to put your money in mutual funds and, you know, maybe bonds, right? And what are mutual funds usually? They're usually just indexes, and why not just do it yourself? And you can't do any worse really than they can, because they're just buying the biggest indexes. And I just, to me, it's just because people are uneducated that they don't understand what really goes on. And when I corner them and go, you know, hey, Jim, what do you guys really do? Well, we sit down based upon their age, we plug them into our formula, and it tells us how much we should buy in bonds and how much we should buy and sell in mutual funds. And that's it. So to me, that's if you're gonna put a couple $100,000 with a certified financial planner, I mean, let me show you how to do it. Okay, now think about this. If I were to buy oil futures, and right now oil futures are at let's just say it's $49 a barrel, right? Well, one contract on the oil futures controls 1,000 barrels of oil. So if I buy one contract, I'm controlling $49,000 worth of oil. Now, the exchanges, the NYMEX and CME and all the exchanges, they're going to charge me only about anywhere roughly $3,500 to $5,000 to buy the contract and hold it overnight. But what's the problem with that? Well, if oil goes down more than 150 ticks, you're going to need more margin and you're going to lose all your money. In fact, you can lose more money than you put in, and we never want to be in that situation. So let's not do it that way. Let's do it this way. Oil is at a near low. Now, what if I could go out to 2017? Look at that, 709 days from now. What if I could go out and let's take a look at these. What about this? I know it's only $8 right now. You know, I could just go out and spend I could buy 1,000 contracts right now and spend $8,100 and buy the underlying. I could just do that, right? Or let's just say I go to the 15 call option for $2.17, $1.17, and buy a 2-year option for $2.17, and then let that thing move up in value. But what if I could tell you that I can do the following? One, we'll have an increased value over time on this position. And what if I could tell you that we could cash flow it every 5 to 15 days, and at the end of, and at a 4-month period, that we would at least double our money, and at the very least be at break even if we were to buy this option. Who would want to buy that investment? Well, people are asking, what kind of money would I make on it? Well, let's say that if you put up $2 and every, let's say 10 to 15 days, someone were to hand you 30 cents, 50 cents, would you guys take that? Would you take that deal? Absolutely, I would. Not without a doubt, I would take that trade. But here's the thing: is for a lot of people, looking at the chart, how do you know how to trade this? How do you know how to play that? Now, let me tell you what oil has been doing most of the time. It will move down hard. 2 o'clock Eastern Standard Time, it'll move right back up. You know, it'll recover about 75% of its move that it made that day. Day after day after day. And if you look at the right things, and volume is one of them, and do you know volume is two-dimensional? Did everyone know that? Volume is not one-dimensional. Can anyone tell me the second dimension on volume? Because I don't think a lot of people know it. You have to look at the two dimension of volume. And this is a big thing that I teach, is two-dimensional volume. And I don't have anyone coming in saying, well, I have no idea what the second dimension is. No, it's not time. Yeah, there you go. It's at depth and price, exactly. You see, you got volume this way, and you got volume this way. And until you know how to understand how that's done, you're not reading what's really going on. Because here's what we're really trying to do. Are you really going to catch the bottom on a market? You don't really know what where the bottom's going to be. But what you do know, and I'm going to teach you one quick secret right here on understanding volume that forever will change your trading. And I want to make sure everyone's listening right now, because I'm going to teach you one of the most important things you're ever going to learn about volume. Is everyone listening? So I'm not going to repeat it. Okay. Here's the most important about volume. Now, I'm not a huge Elliott wave or Elliottician, okay? I think Elliott wave has validity. I think it has a lot of good things. The problem I ran into with Elliott wave is it would keep recounting the wave cycles, and it would always get screwed up, okay? So for me, I never figured it out. But what I've noticed is, and what people have, I've seen over a long period of time, is there is a relationship between volume and how volume comes into a market. Now listen up. Volume comes in 3 waves. And it comes, wave 1, volume will start to increase and peak. It'll come back down again, and it'll come back in again, peak again, and then the third time it'll come in and it'll peak even more. This is one of the most important things you'll ever learn about volume when you trade. So this tells me when a trend is done, okay? See where I have volume come in here and it comes out. Volume comes back in, comes out. Volume comes in. This is the 3rd time. And by now I've exhausted all of the sellers. You've got all the people who are going short. They're now going to be going long. This tells me with about a 90% accuracy that we're down at the end of the bottom of the market. And now it's just a simple thing of how do I want to take it to the upside. So what I'm looking at doing is I'm actually looking at going out and buying a 3-year or 2-year option. I'm going to spend about $2 on it. I'm going to spend about $2, and what I'm going to actually buy is the January 2017 15 call for about $2.10. That's it. And who would want to learn how to cash flow this every month, how to have this thing go from $2 to maybe $20, $30 in the next 6 to 10 months, and absolutely make a boatload of money if we see oil come back up. Now, can I say oil's going? I can guarantee oil's going to go back up. Absolutely not. But what have we seen over time? We've seen the cyclical nature of oil, and we see that it goes up and down, up and down. We've seen that historically. But even if it goes sideways, I'm going to show you how to cash flow it. Because what I'm doing next week is I'm going to have a webinar on all that stuff, and you're going to learn how to do it. But more importantly is I am going to actually walk you through week after week and do it with you. What's better than that, and me doing it with you? You know, you've learned a lot about leveraging long-term options and getting solid ETFs. Unfortunately, there's not enough time in just this hour show to show you everything you need to know about leaps. And I think the last thing I just showed you about volume has piqued a lot of people's interest. But I want you to join me Saturday for a 3-hour workshop, February 21st. And I'm going to get into more about leaps. And I'm actually getting into gold. And I'm going to show you how to cash flow and make money on the next oil boom. And I believe in my heart, I believe this is the next oil boom. And it is going to absolutely be an opportune time to get in. Because you're going to be able to take a small investment and over the next 2 to 6 months, make that into a much, much larger amount of money. And it's going to be a great event. I'm going to show you the best ETFs I'm going to use. I'm going to show how I'm getting in. If you like what I showed you on that volume, the 3 volume spike setup, that's just the tip of the iceberg. I'm going to show you very concrete strategies on how to get into these trades and how to trade them. And if you don't know anything about options, we'll take care of you on that too. Because I'm going to show you how I find them, how I adjust them, everything. And it's called the ETF Growth Formula, Leap into a Better Future. And that's going to be Saturday, February 21st from 10 a.m. to 1 p.m. Eastern Standard Time. Here is more about the formula. You're going to learn why now is the best time to trade in ETFs. And I just went over a few examples on ETFs, why you want to be trading them. It is absolutely imperative that you're trading the right stuff and you're doing the right things. I actually got a few more minutes here. So timing is everything. Now, you could get in late to oil, you could get in early, but what I'm going to show you is going to be absolutely amazing. And I'm going to show you how to potentially generate 15 to 25% returns on a monthly basis, because anytime you get into a trade, you have to assume the worst can happen and will happen. And you have to have a game plan for it. If you don't, then you're just fooling yourself. Question, how about buying long-term calls and sell short-term call money puts? That's a synthetic call, but there is a risk to that. So I'm one of these guys who I started out back in late 90s, and I went to all the seminars out there, and I believe the book I bought had to be at least 1.5 inches to 2 inches thick on options. And it took me 6 months just to get through all that stuff and get a basic understanding. What I'm going to show you at this event on the 21st is simplification of the whole process, because when you deal with options, you're dealing with a whole bunch of things, and I'll get into that in just a second. But you don't just buy an option, because what do you have to worry about? Well, you got IV. What's IV? Implied volatility, right? You've got interest rates. Well, interest rates aren't changing too much. There's 9 factors that 9 plus, I should say, that affect the price of an option. And I'm not going to get into the Black-Scholes model and all the different option calculations. But using the Thinkorswim software, I found some very quick ways of getting answers to stuff that I need to know immediately to whether or not I want to trade an option. And it's absolutely, it'll cut your time down immensely. Oh, one other thing here. You know what? Instead of spending, I'll get into that in a second. I got so much on my mind right now, thinking about what we can do with this stuff. I'm going to show you how to leverage the long-term options, leaps. And again, a leap is just an option that's 9 months in length or longer. Minimize your risk. The best ETFs for trading oil and gold. Did you see the volume of that ETF I showed you? It was trading 18 million contracts a day. Now, that's the kind of ETF I like. if I were to pop into the Thinkorswim software, and this is one thing I do like about it, is if I click here, these are all the ETFs. I don't remember the exact amount, but there's hundreds of ETFs here from anything and everything. But guess what? Not all of them have enough volume that I'd want to trade it. Not all of them are good ways of trading the real thing. And I could go and, do I want to trade the GC? What's the GC? That's the gold futures. Well, you know what? Instead of doing that, look at GLD, the Gold Trust ETF. A little bit better way of trading it. Why? It's a lot less money. What's gold right now? Roughly 1,017 an ounce, right? Well, this ETF is what? It's 1/10 that. Yeah, maybe a better way to trade it. Do I have enough volume, though? Well, this thing's averaging, I'd say, 12 to 15 million contracts. I mean, that's just the way to go. I'm going to show you how to find the right ones so you're not trading the bad ones. And when a bad trade happens, I'm going to show you how to pong the trade. Guess what? If you ever get into a trade, 3 things are going to happen. I actually guarantee they're going to happen. I guarantee that it's going to go either up, down, or sideways. Guarantee it. It's going to happen. So we're going to have a plan for these 3 things, and I call it my pong trade. And if we get into a trade, if we go long oil and it starts coming down, guess what? We implement our plan. And you know who tends to make some of the better traders, and I'm kind of probably giving some good information for the next speaker today. Do you know who the best traders out there tend to be on average? Well, they're not doctors. They're not attorneys. Women are good traders. Well, here's the thing. Let me go on a quick tangent here. Do you know why my daughter, who's 17, is such a good trader? She doesn't know. She knows 1/100th of what most people know about oil trading or trading in general. But you know what she does know? She knows the plan. She knows the entry. She knows what happens if it's going to go down, up, and sideways for every trade. If you ask her about trading, if you ask her what she knows about trading, it's extremely small. But what she does know is she knows the plan, and she sticks to it. And that's why she's actually going to be interviewed in the next week or two by the proprietary trading firm, and they're going to interview her and say, hey, why are you so successful? And they're going to ask her all these complex and all these, what's your R ratio and what's this and what's that, and she's going to look at them and go, I don't know. And then they're going to ask her, what do you know? Well, I know where my entry is going to be. I know where my stop is and my target on everything. If it goes against me, I know where I'm getting out. So it's about executing the plan, and that's what the Pong methodology is about: is executing the plan. It's going to go up, down, or sideways. I guarantee it. So plan for it. The best traders tend to be pilots. Why? Because if you've ever, when I took my flying lessons, and I was up in the R-22 helicopter, my instructor disengaged the clutch. Does anybody know what happens when you disengage the clutch on an R-22 helicopter? And you can rev all the power you want. Guess what? You're going to start heading down. Okay? You're going to start heading down, and an effect called, why am I drawing a blank? When you start heading down in a helicopter, you know what happens? Your main rotor, if you tilt the rotors, they start speeding up, right? And it's called auto rotation. And as you head down, the rotors actually start spinning faster and faster and faster to the point where you can actually hover for a few minutes above ground on zero power. And it's a great effect. People think that helicopters are really, they're a bad thing. Well, they're actually safer than airplanes in some ways, because if you lose power, and specifically in a Robinson R22, they have what's called the dead zone. And the dead zone is this. If you are 500 feet or less and you're going 0 miles an hour and the engine stops, guess what? You're dead. You're not gonna live. But because as it disseminates, you're not going to have enough time for those rotors to pick up speed and pick up enough speed enough to go down. You have to be above 500 feet. Well, let's relate this to trading. You got to stick with your rules. The second that you lose power on a Robinson R22 helicopter, you have to instinctively, not even think about it, adjust the main rotor and put it at a pitch angle. If you don't, you're going to die. In trading, when you get into a trade and it goes against you and you start to lose and it hits the level of where you're supposed to adjust the trade, if you don't, you're dead. You're going to lose on that. You're going to hurt yourself even more on that trade. So you have to implement these plans ahead of time. If not, you're never going to make it as a trader. It's too hard. So the Pong trade is absolutely extremely important. When and how to adjust your trades to keep them in the profit zone. So when you're flying your computer and you're trading, you're going to know how to adjust it. Because it's my job to empower you. You see, it was my goal to empower my son and my daughter to be able to trade for themselves to make their own money. It's my job as an instructor, mentor, to empower you, to teach you the things to make you successful. And that's what you need to learn when you do this. I'm a huge believer in setting alerts, and it keeps me in check to make sure that I make the right changes, because in option trading you can set stops with options, but a lot of times the market makers will see your trade and they'll try to move price artificially and play games, and it can be a mess. So it's important that you know how to do it. And trading leap options on oil and gold is like shooting fish in a barrel in today's market. Why? Because when you know how to catch markets at near bottoms and tops, they just go your direction. I believe oil is bottomed out, and that means it can only go up in one direction. And this is a once in a 5 to 8 year opportunity that you're going to have on oil. The ETF growth formula is a one-time training event. We'll record it, and everyone who registers will get full access to the recording, because I'm going to say stuff that you may not get the first, second, or even third time. Now, I'm usually pretty good at explaining it the first time, but like anything else, you know, repetition, what is the mother skill, is what they say. So we're going to turn this training into a course and plan on selling it for $597. It's worth much more than that. We're limiting this to 25 people. Why? Because I just anticipate a lot of questions, especially when you teach options. There are a lot of questions. And if I have more people than that in the class, it's just going to get, I'm going to be bogged down in questions for the next 10 or 12 hours. Now, most of the time I'll have foreseen a lot of the questions, but I'll teach a section and then we're going to go into question and answer. And you know, sometimes I even open up the mic so we can just chat back and forth and make it more personal versus just people text stuff in. It all depends upon what kind of environment we have. I like to make it more personal. So, you know, it's going to be a small group. If you sign up today, you'll get the live training, full access to the course and the recording, along with some extra bonuses we're working out and we'll announce on Saturday. Today, if you sign up, it's just $297. An absolute drop in the bucket to the kind of money you can make trading the bottom of what oil is going to be. So go right now to investosuccess.com/growth and join me on the 21st. It's going to be a great time. It's going to be, you know, the way I like to do it is I'll teach for probably 30 to 45 minutes. And I'll be answering some questions between now and then I'll stop and we go into question and answer. And then we'll take about a 10-15 minute break. We'll come back, teach for another 30 to 45 minutes, answer some questions here and there, but then when I'm done teaching that part of the content, we go into question and answer. So it's just not a one-time thing. Now, on a weekly basis, 3 times a month, I call trades out, and it's called my weeklies room. I trade the weeklies, and in that room, for those people who are part of it, I'll be calling some of these trades out for them. I did just the other day. So there's live time that you can chat with me if you have questions, and we place our trades. And one of the trades that we did is we started to look at the Bloomberg Pro Shares. And we're starting to get in on a long position on oil, taking this thing all the way up to 35. Another thing I got to tell you guys, ladies and gentlemen, this is a great time to be trading options. Now, am I a seller of options? Not as much. When I look at, where is that? When I look at the VIX, which is the volatility index, there it is. The VIX measures volatility of the market. And let me just put it to you in a nutshell. And again, this is how I teach, guys. This is how I teach. How do you like this definition? If the VIX is 20 or, well, technically 20 or fewer, or 20 or less, it's low volatility. Guess what we're going to do? We're a buyer. We're going to buy options all day long. If the VIX is up here around 25 or higher, it's high volatility. We are selling. So what if I had just a little bit of a sheet that says, hey, we're buying down here. If options are up here, we're selling. That'll take a lot of your headache away just from owning options. So I will simplify the process of options for you guys. I'll make it really, really easy. So the VIX is low right now. When that VIX starts heading up to 22, 24, 26, do you know what it's going to do to the price of our call options, our long term? It is like putting a air compressor into them. It's going to start inflating them, and the value is going to go up quite a bit. So we're getting in on rock bottom prices. Yeah, exactly. We're getting in at rock bottom prices on these options, and that's what. And I want to pay. I want to get in at a good price. to a store and overpay for stuff, or do you want to get in wholesale? You want to get in wholesale. So join me on the February 21st. If you can't attend, we're going to record it. If you do get the recording because you can't attend and you have questions, we answer them in our weeklies room every week, 3 times a month, and we're happy to help you guys out. So I'll just open it up to a couple questions, and I think the next presenter will be coming on shortly, but I want to thank you for your time. I want to open your eyes to jumping on the next big thing, and it's going to be exciting. It's going to be really, really exciting. How about the low point on SDS? Hold on one second here. Now, just one good trade will easily pay for the event, and that's what we want it to happen. We want what we do to pay for this event and make it an easy thing for you. And if you're one of the first 10 people to sign up and register, guess what? I'm going to throw in 3 months of my ETF trade picks. And that's 1 to 3 trades per month. You only need 1 good trade a month to do well. You know, we're not investing, we're taking $2,000 to $3,000 and investing what's equivalent to $50,000 to $80,000. That's so much smarter than buying the actual thing. So I encourage you to shadow the trades in simulation to accelerate your learning curve. It's very important you do that. And join us Saturday, February 21st, 10 a.m. to 1 p.m. Eastern Standard Time. That's a Saturday morning. We're not starting too early. I know on the West Coast it's not too bad, but it's going to be a great time. So come on and join us. Go to investtosuccess.com/growth, and we'll have a great time. Right now, we're under 20 on the VIX, which means we're buyers, John. And if oil stays at, let's just say, 40, 50 bucks a barrel, you know what? We're going to cash flow that thing every single month, pulling out 30 to 50 to 80 cents every month on it. 2 or 3 times we'll try to do that, and we'll turn it into a cash flow situation. If it starts heading down lower, well, then maybe we'll take a small loss and we'll get back in at a different time. But when I look at the chart of oil and I look at what these ETFs have done, kind of like that little nugget of information I just got done sharing with you, and let's put up CL. See how that volume came in? 600,000 contracts traded on oil. I have never, ever seen that. But let's plan, hey, ladies and gentlemen, let's plan that oil is going to do this. That's how I'm actually planning on trading oil. Okay? That's what I'm anticipating. That's what I'm planning. So if it does this, well, then that's just icing on the cake. You see, if I can cash flow this small downward trend, that's really my biggest thing that I'm going to look into. And it's not that hard to do. Because it could do that. And if it does that, hey, you know what? We've planned for it. We'll still do well. Now, are we going to make the 20% that month? No, we'll probably make 5 to 8. But we're still cash flowing it. We're still getting our money back. We're still reducing our risk. We're still doing a lot of great things. But for a few more advanced traders, when you're looking at this chart, what's going on right now with oil? What do you see happening? Well, it's doing this, right? What does oil do? Oil is so predictable. Here's all oil does. Moves, consolidates, moves, consolidates, moves, consolidates. That's all that oil does. Look, it did it right here, right? Consolidation, move. Consolidation, move, right? That's all it's doing. It's consolidating, and then it's going to move. That's what I'm seeing. That's all it does. Look at it historically over the last couple of years. That's all oil does. Moves, consolidates, moves, consolidates. So with oil, we've got the biggest volume I have ever seen on oil historically, which tells me we put the bottom in at 43.58. So we'll turn this into different type of option trades. We'll do a lot of cool things with that. So with that, guys, I'm out of time. Thanks for joining me. Please join me on the 21st. Whoa. And come join us. This is a great deal. It's a really good deal because after the event, it'll be we'll have it available, but it'll be at a much more substantial cost. And you know, trade with me, and let's do this together over the next 6 to 9 months. All right, guys. I'll see you guys next time. Dan, thanks for giving me the slot, and we'll see you guys on the 21st.